Hello and welcome to the Market Outlook webinar. I'm David Jones and I'm doing this in conjunction with Aondo Markets. While we've got this screen up, I'll just put the risk warning up as well. This is a webinar that runs every Wednesday lunchtime at 12:30. Typically lasts for just under 30 minutes, and we look at a mix of different markets. So we look at FX, indices, commodities, and I think today we'll actually look at a share as well. We'll have a look at share, one of the last things that we look at today. If ever you miss any of these, they are recorded. So if you're watching the recorded version, it was held live on Wednesday, the 7th of September. But as usual, without further ado, let's just get into it. Let me just flip over to the charts. Here we go. So what we're looking at here is, which hopefully you can see on your screen. Let me just bring that up. There we go. I hope you can see that. That's the Aondo trading platform, and that's here we go there. That's this is Trade Hub. So what we're looking at here, I somehow managed to have stopped everybody seeing my screen. You'd have thought after all these years I'd know what I was doing with this. Hold on a second. Let me just flip this over. I think it's getting confused because the PowerPoint is blocking it. There we go. Let's try it now. Let me just flip things around. There we go. There we go. A few teething problems. So the first chart I've got up here, I put this on Twitter a bit earlier today. I think this is an interesting one. This is euro sterling. So it's the euro pound exchange rate, and I think maybe if there's a market to watch in the next couple of days, it could be this one. Let's just go back a little bit, just to remind ourselves, where we are in the big picture. Still harking back to that move, that the post-Brexit vote, post-EU referendum move in euro sterling, and we saw sharp move up for the euro. Of course, I'm sure we all remember. The pound took quite a pasting against a bunch of different currencies. We saw a sharp move up in euro sterling, up to sort of the 86 level. And it sold off a little bit middle of July, but found a bit more momentum going into the middle of August and pushed up to 87. But since then, we've had what looks to be, it's almost a textbook decline from those highs back in the middle of August. And something I put on Twitter this morning, I think if you've attended these webinars before, you will know that I do have something of an obsession with the previous day's high and low. I think for really short-term traders, if we're looking for levels that could be support or resistance, then the previous day's high and low is always a good one to look at. And if we look, this is a 4-hour chart we're looking at here on euro sterling. But over, I think it's the last couple of weeks, euro sterling has failed to make a break through the previous day's high. So it's been a cracking downtrend if you've been in the trend. If you've been short euro sterling, it's dropped something like just more than 300 points by yesterday. It's dropped more than 300 points without really, if you've been trailing a stop down over the previous day's high, which is all very well in hindsight, of course, you wouldn't have got taken out. But today, this morning, it did break through Tuesday's high, and I think in the last hour or so, it's broken through Monday's high. So it's interesting. I think we're seeing a show of strength in euro sterling. I mean, it's only, don't get me wrong, it's only early days, but here's it on an hourly chart, and you can see maybe the moves a bit better. This is where we're trading today, back above. That was Tuesday's high. That was Monday's high. So we're back up. Actually, it looks like we're just back up above Monday's high there. There's Monday's high. And then we have the highs from the end of last week. But it's the first bit of strength, real strength, that we've seen in euro sterling for a couple of weeks. I think it's still early days. We had a couple last week that we looked at to keep an eye on, and I think things did pan out. But I think this is maybe an interesting one to watch. It is still early. It's only one day. It was only yesterday that it hit a new low for the down move. So let's not get too carried away about the euro going to parity with the pound just yet. But I do think it's interesting. I think maybe the level to watch is I think again is I always get my horizontals and my verticals mixed up. Hold on a second. Yeah, horizontal high and low. That's what I want. I think maybe the true level to watch is about here. Let's say 84.50. for sake of argument. So it's the highs from the 1st and the 2nd of September. I think if, it's only, 40 points away, 45 points away from where we are now. I think maybe, if over the course of the next couple of days we saw a move in euro sterling that broke out to this level here, then started pulling back, a bit similar to what the pound was doing this time last week, and then saw some strength. So we've got to go up, come down, then a bit of strength. I think it looks like a buying opportunity with a stop below the lows here. And you can see this was, an important level. This 83.40 was something of a level, the sort of 25th July to the first week of August. So I do think euro sterling, after I've not been paying that much attention to it, I must admit, in recent weeks. I think there's been more going on with the pound dollar. But I think this is a really interesting one to watch. And also, I think we did talk about this last week. I said I'm not a massive fan of having, lots of squiggly lines on charts, Bollinger Bands, MACDs, moving averages, stochastics, Fibonacci, all that stuff. I much prefer a clean chart, but I think something I do look at now and again is the RSI, the Relative Strength Index, which is what I've got down here. And this is a 10-period RSI. So something that I look at is this idea of divergence. And I think we did talk about this last week when we talked about the pound, where, because the RSI, all it is a calculation based on the price. So, and it just shows you how strong or how weak the price is currently to how it has been over recent periods. So when the RSI is below 30%, the market in question is said to be oversold. And when the RSI is above 70%, the market in question is said to be overbought. But you can see the problem in strong trending markets, like clearly we've had in plenty of currencies since June. It'll give you a sell signal too early. But what can be effective is this idea of divergence, where here's an example, a good example. Market pushes high, the RSI is high. Market pushes a bit higher still, but the RSI is falling away. So it's a suggestion that maybe the market is running out of steam, maybe that uptrend's running out of steam. And this is what we've had in euro sterling over the last 4 days or so, I think, where the market's pushed to a low, the RSI has been very oversold, fair enough. Market's rallied a bit, pushed lower, but the RSI has made a higher low, and again here pushes lower again, and we have a higher low. So we have the RSI almost going into an uptrend, even though the market is falling. So that does add a bit more weight to the argument that maybe, we're seeing an important medium-term base forming in euro sterling. But like I say, I think the level to watch is 84.50. So I've got an alarm set on that, so it will bleep at me if it goes off. But I think if we see that broken, bit of a pullback, and then some strength, it could be the sign that the trend is over, the downtrend is over. For now, though, let's get too carried away. That trend is definitely still down for now, so it remains to be seen. But I do think euro sterling could well be the market to watch in the next couple of days. Plus, of course, tomorrow, which could, I suppose, throw the cat amongst the pigeons a little bit on our charts, we've got the European Central Bank's interest rate decision due out. I think they announced at 12:45, and then from 1:30, it's all UK time. They announce at 12:45 tomorrow lunchtime, and then at 1:30 they have the press conference. And I think it's traditionally the press conference that provides more volatility. So let's see what happens. But I think maybe an interesting couple of days in euro sterling. So that's definitely one for me to watch in the next few days. Let's have a look at the pound. We talked about this last week. I think a similar sort of setup on the pound, and it has gone absolutely crazy, as the pound often does at the moment. But I think it was we were down here last week on the pound, weren't we, where the market had declined, and what period am I looking at here? I'm looking at arrows. There we go. The market had declined. There we go. And we saw a few days, again, the previous days' lows were holding. So it wasn't really. I think when we were doing the webinar, had it just broken the highs? Maybe were we here? I think it was. I think we just broken through the highs in the morning. And I said, if it comes back, it looks like a buying opportunity. And lo and behold, I actually did it. I actually followed my own advice. So I ended up buying in at, I think it was about 31.05 was where I bought, I think. So I think it sold off and it started moving back up again. So I bought up, as usual, with a stop loss below here. As usual, got out far too early, ended up coming out. I mean, it was quite a sharp rise the next day, wasn't it? ended up coming out about 32.70, so missed another 100 odd points. But that was a similar setup, I think, to the euro sterling setup. And again, we had this idea of divergence. You see where the RSI is going up, even though the market's flat, the RSI is picking up, suggesting maybe the weakness is coming to an end. I think it's a difficult one to call now, euro sterling. I think it's easy maybe to get a bit too carried away because of the strength we've seen. But we've had this a couple of surprisingly good data releases, haven't we, about the UK economy in the last week that's really powered the pound higher. But I think we're back to a big level, and I think again it's an interesting one to watch, and it's an interesting one probably with not much urgency for me anyway. But here is, of course, is the Brexit decision, and we had a slight bounce towards the end of June, but let me just whack a line on that. You can see sort of how important that 135.30, 135.40 level has been. We had the rally there, has another go again during July, can't do it, and lo and behold, this is where we are. So I think it's interesting up here. If it breaks 35.30 at the moment, I'd have to think that maybe it's not going to break it this time round. But let's see. I think if we get a move through there, we can start getting, I think, much more aggressive in terms of recovery targets for the pound against the dollar. But don't underestimate how big a barrier this level has been. So I think it's an interesting couple of days ahead, pound against the dollar. It's had a cracking week. It's had a run of, 300 points? Actually, even more by yesterday. Was it nearly 400 points yesterday? Arguably, well, not arguably, that trend is still up. The trend is still up. So the sort of textbook view would be to be a buyer on weakness for the pound. The hourly trend. The trend on the hourly charts is still definitely up. So I think it's an interesting one, but just bear in mind we do have this big obstacle coming up, not a million miles away from where we are now. So I think it's still bullish, but there's big resistance about 150 points higher than where we are now. So I think it's interesting. It's going to be an interesting couple of days, I think, or an interesting week on pound US dollar. Let me close my email then. I didn't realize I had that open, blimping away at me. Okay, the other one we looked at last week is one to watch: Aussie dollar, US dollar. So the Australian dollar, US dollar, and I think I was bullish on it, but I think again it's a really interesting one this at the moment for sort of long-term chartists. Do we need to go weekly? Do we need to go as far back as that? Yeah, I think we do. So that the Australian dollar has been in a downtrend had been or has been, depending on what your view is, for 3 years. And it was, this is very much a commodity-driven economy, Australia, and with the slowdown in demand from China, the weakness in commodity prices, the Aussie dollar has taken a hit. And I think we looked at this trend last week. So our trend looks something like that, for example. So off these levels here from March 2013, and it really is, crunch time. We're looking at a weekly candle here, so this is a really long-term look. It's really crunch time for the Australian dollar up here, and that's what makes it interesting. We have the first level to watch, the highs from earlier this year, about 78.35. I think if we see a move through there, then it's time to start thinking that really this downtrend, this major downtrend in the Aussie dollar is over, and it's time to get a lot more bullish. And I think the level I was looking at a week ago, so it would have been, it was the end of August, wasn't it? Was again looking to see, hang on, I think I need to go to a 4-hour chart. Hold on a second, because there is, I think, on the intraday charts, there we go. So I had been looking, there was that uptrend that looked something like this. I've drawn that in the wrong place. There we go. Okay, let's not worry about it. There was this uptrend here that had sort of lost some steam, but we were looking at these levels as still being important, the sort of 73.80, 7400 levels. So it's interesting the market has squeezed a little bit higher. I think that sort of intermediate trend is still up, but for me, the one to watch is going to be how it performs by those multi-year highs. I think my trend really should look something like that. There we go. There we go. So it had broken down at that downtrend, but it hadn't taken out these previous lows. So I think, for me, it's a bit of a sit on your hands one at the moment, because we may well see a problem 50, 60 points higher than here. But from a bigger picture point of view, it is how it performs near those highs for the year at 78.35. So I think it's an interesting one to watch. Maybe not the same sort of urgency that we have in euro sterling, but I think if we do see the start of a big turnaround in its trend, there could be some good opportunities on the way back up. And the final currency, again, it's another one from last week, dollar yen. It's that big level in dollar yen. It's not quite textbook, I think, dollar yen, but we've seen these levels really perform and do sort of a half decent job. Because if we go back, I think there was the webinar we did back in July when we first looked at this, and the thing it was looking at, which is still the case, the trend for dollar yen is down. Okay, so if I go off that level there and draw it, that's probably the truer trend. So that was a downtrend in dollar yen, and it hit 99 again on Brexit day, I think. Rallied, came back, held, rallied, and rallied back to that downtrend line. But again, during August, the middle of August, you can see, even though the trend is still down, you can see just how important this sort of 99 to 100 level is proving to be for dollar yen. Once again, it rallied up. It has had a little look to that trend line, but for me, until it breaks through this previous high, let's say 108 for sake of argument, we can't really say that longer term downtrend has changed. But that 99 to 100 level really is proving to be strong support. So while it is going against that major trend, it still looks to me, I mean, we're sort of in the middle of nowhere at the moment. It still looks to me, this is the hourly chart we're looking at now. Let me just pull it across. But if we do get weakness, back towards that 100 zone, it does look like a buying opportunity. At the moment, we're at 101, so it's a bit of a do nothing area. But for me, if we saw dollar yen drop over the next few days down to here and some strength come back in, it does look interesting. So that's the currency bit done. We're going to have a look at some of the indices now. But I do think, for me, the big one to watch is the pound as well, but mainly euro sterling, to see, because we've seen the last couple of days break through the previous, well, today has broken through the last couple of days previous highs. We've got a bit of divergence on the RSI, and the first signs of maybe having a nose to that downtrend. 84.50, I would say, is a big level to watch. But let's see what happens with the euro sterling in the days ahead. Something else I think is interesting is in stock markets. We'll have a look at the FTSE, the DAX, and the Dow. But I think maybe the more interesting one for me is the FTSE, because of the move we saw last week on the payrolls release on Friday. We saw, as usual, I think quite a bit of manicness in stock markets, but we did see the FTSE break through something that has been something of a big level. If I go to maybe a 4-hour chart, does that make more sense? There we go. So if we zoom in, because the bit I'm interested in really is from up here. So we had for some time stock markets. My mouse is too sensitive today. Let's bring that over. Stock markets had been sort of sliding lower the second half of August. So if I chuck a trend line on here, then my FTSE trend looks something like, because we did get that break last week, but it didn't last, and a break again there, so I've got to adjust my trend line. So we had, broadly speaking, a half decent downtrend in the second half of August. But then on Friday morning, we saw some strength anyway ahead of the payrolls at 1:30 UK time, and then into the payrolls, bang! We saw that trend line break, taking out lots of previous highs. So that was a really bullish move, I think. It all happened in one day. But the market since then has drifted. But I would definitely be inclined to be looking for buying opportunities here, looking to see if this is the break, then a bit of weakness, and then bang, away we go, maybe to have a look at 7,000. I think if the market came all the way back down to here, 67, 65, it looks like a great opportunity with a stop loss under that low from September the 1st, so under the low around about 67.20. But I would, even though we've had something of a negative start to this week, I would be looking to see if the FTSE is maybe getting ready to snap back higher. I think it's been a really quiet day today. That's There we go. That's the day so far. And I think for me, one of the I did do a little trade. I am in a little trade on the FTSE, but based off the fact that today, when it opened today, it did spike very briefly through yesterday's low, but it reversed quite quickly. So I think that's I've got a trade on with a stop loss just under the low for today to see if this is the start of a move higher. So far, it's done nothing, but it's really just based on what we've seen on the hourly chart to the end of last week, with that level breaking and the market moving a lot higher. So I'll see. I'll be expecting, personally, I'm expecting a recovery at least back up to those highs from Friday. But let's see what happens. But I think the FTSE, I think along with Euro Sterling, is an interesting one, I think, to keep an eye on in the next few days to see what happens. The other stock market indices, I think a bit more mixed. The DAX, here's the DAX. The DAX has been moving higher for the past week. But for me, is near, clearly back near the top of the range from the middle of August, just above sort of the 10,750 level. So I think it's going to be interesting to see how it performs if it does get up to there. But I think maybe the risk is with the DAX, if we're getting back up to these sort of levels, is it going to run out of steam once again? So I think it's a bit more of a difficult call, I think, for the DAX. And if we look at the Dow, where's the Dow on my charts? Let's bring that one up. There we go. You can see it's pretty boring. The Dow. So we're stuck in this range. We're stuck in this sideways range. Broadly speaking, it did poke higher briefly, sort of middle of August, but this sideways range that's sort of underpinned by 18,250 and can't get through 18,700. And at the moment, we're almost slap bang in the middle of that range at 18,500. So I think it's pretty boring, but I think that there's still an appetite out there. If we looked on a really short-term chart, so this is the Dow, these are 5-minute candles. I think that was the move. Would that have been the move on the payrolls? No, it wouldn't, would it? No, it was before that. But I think there's still an appetite out there to be a buyer, because whenever we saw any weakness, like yesterday, when it drifted off yesterday. It's not yesterday, is it? When we drifted off yesterday, I always get my dates mixed up in these 24-hour markets. It drifted off yesterday back to 18,450. You can see it came back pretty sharply. So again, assuming the market's going to stay boring for a bit, any weakness sort of below 18,480 looks like a buying opportunity, and I'd be a bit nervous if it gets much above sort of 18,530, 18,540. So it's a little bit boring, the Dow. So for me, the stock market of choice at the moment is the FTSE 100. So there's our hourly chart on the Dow, and you can just see, we're trading roughly where we were. Actually, about a month ago, we were about 18,500. Clearly it's moved up, down, but not really that much. So it's been a bit of an odd time in the US stock market. So I think maybe the FTSE 100 is the one to watch. Let's take a look at gold and oil, and then a share. We'll have a look at the share price of Shell, because I had a look at that for something else this week, but we'll have a look at Shell once we've had a look at these. We don't normally look at shares on these things. But I think I put something on Twitter about this today. Gold has been, I think the level we were talking about last week, was sort of these 1,300 lows near enough. And they have held, even though the price of gold has been a little bit boring, I think, since maybe early July. For me, that trend, and it's all about the trend. That trend from is it January? Yeah, January this year. That trend from January this year, which looks something like that, with gold holding above 1,300, that trend is still very much intact. So for me, I would definitely, still want to be a buyer of gold. I'd only change my opinion in the short term if it broke these lows from the beginning of September, but arguably there's still a whole load of support in this area here. So me, I think, even though it's gone a bit quiet and a little bit boring, the trend for gold is still up, and I'd still be inclined to be a buyer. 1,300 is the first big level on the downside, the lows from just last week, but that trend from January this year, so that's been going for 8 months now, is still doing a good job. Oh, someone's asked about the S&P. I'm assuming the S&P is going to be exactly the same as the Dow. It's really not going to be that much different. Hang on. I don't think I've got it in my watch list, but I think it's going to be a similar sort of sideways market to what the Dow's seeing. Um, and oil, I think oil, I think, is a bit confusing at the moment, but I think the bias is still up. You know, we had this move on oil from the lows when everyone thought, well, plenty of people were talking about it going to like $15 a barrel. And of course, what does it do? When everyone thinks it's going to go one way, it goes completely the opposite direction, rallying up to sort of 51. Then we saw, weakness come back in, drifts off to 39, rallies, and I just think it's just quite a hard one to call. Clearly, that was a great trend to be trading. At the moment, I think it's a bit more confused, but I would say that probably the bias still feels a bit more down than up, a bit more up than down. Sorry, that's an important thing to get right. A bit more up than down in oil at the moment. Again, if we look at the moves over the last few days, we had this sharp move September the 5th. The market's come off a little bit, but these lows from the beginning of September ahead of what $42.50 a barrel mark have held. So I would be more inclined to be a buyer rather than a seller in the price of oil at the moment. But I think it's nowhere near clearly as clear cut as it was when we were looking at it, when we were looking at the trends back then. I think it's a lot choppier. But I think it'll go back and have a look at sort of 50, 51 before it takes out 39. But again, it's a little bit slap bang in the middle of that range, isn't it, at the moment? So for me, if we've got weakness back down to here, it looks like a good opportunity. But based on the hourlies, I think it does look a bit more down than up. Oh, someone's saying New Zealand dollar, US dollar. Okay, I haven't got that one either. Let me stop being lazy and actually put these into a watch list. Hold on a second. Right, let me just get rid of that. So let me just see. I've not got the S&P. So let's put the S&P in, and we'll put the New Zealand dollar, and then we'll have a look at Shell once we've done all that. Indices, US. Which ones do we want? That one. S&P rolling. Okay. Foreign exchange. I must admit, I've not looked at the Aussie dollar, New Zealand dollar, US dollar, sorry, isn't it, for ages. But let's take a look. Okay. Right, let's have a quick look at the S&P first. There we go. That is not the most exciting chart in the world, is it? 1 minute chart of the S&P out of hours. Let's have a look on the dailies. There we go. There we go. It's a similar thing to the Dow, isn't it? We're stuck in this range, and we've got good support down here from the middle of August, resistance up here, and we're just doing nothing. So I think we just need, but they need to break out, don't they? They need to break out to give us a clue as to what's going on. We did see, you can see how important this sort of 2190 area has been for the S&P. End of August, had a move up there yesterday, and it's come off a bit overnight. And on the downside, from the last couple of days, 2174-ish has been support, but it's just a little bit sideways, isn't it? I think at the moment. New Zealand dollar, US dollar. Let's have a look. Let's have a look at a weekly chart, see where we are in the big. Well, that's interesting, isn't it? So we did have. That looks really strong. We had this big trend. Let's do it on the dailies. It's on the dailies from this big trend down that's clearly been over for some time now. If we took it from up there down to there-ish, there we go. So that's clearly been over for a while. And this new trend that's been in place for much of this year, I should pay a bit more attention to this one based on what the chart looks like. So our trend now looks something like that, doesn't it? So it's accelerated a bit away from the trend, but you'd want to be a buyer on weakness, wouldn't you? I think we've got, it's a long way away from where we are now, but lots of support from 6950 to 7000, and then different pockets of support, 7100, 7200, but it's currently at, what's that? It's about a 14-month high against the US dollar, the New Zealand dollar. So it's an interesting one. We could well run into some problems up here, but based on those charts, let's have a look on the hourlies. Wow, look at that. You would definitely want to be a buyer on any weakness. I mean, it's really accelerated. It's moved, what, 250 points so far this month. That is a big move. So for me, as ever, I'd be sitting there waiting to see if it's going to sell off and we get a better buying opportunity. But that's an undeniably strong market and looks set to move higher. So that's an interesting one. We'll have to do that one next week as well. You have to remind me to come back to it. Right, let's have a look. Let's have a quick look. We'll wrap things up. We'll have a look at the price of Shell because I thought it was an interesting one. I think when we look at these things, we tend to maybe look more at really short-term stuff. But just to show that all the stuff we talk about is just as applicable. Hang on a second. There was an interesting opportunity in Shell, if I could spell it, over the last week. Is it Royal Dutch Shell? Let's put Dutch in. No, hang on a second. Is it Basic Resources? If I had to put RDSB, I think I'm refining this too much, aren't I? Oil and gas. There we go. Okay, let's add that one in. Okay, let's have a look at the chart. I write for a magazine every week, and I write like a charting column and a currency column. But it was interesting. I thought the principles we talk about here, trend, support, and resistance. Clearly, they play out on the medium-term charts as well. And I was talking about Shell about this massive decline that we've seen in Shell. Clearly, of course, following the oil price lower from $26 a share down as low as nearly 12. But the recovery, has been on since then. It's broken out of that downtrend. It's taken out sort of major highs here, major highs there. And if we drew a line, a high-low line, I should maybe have zoomed in for this, but if it looks a bit of spiky stuff going on in this chart. But there's maybe an opportunity. It was about 19. I think as I wrote it and sent it off, it sort of hit the level and went away. But I was looking at this sort of 19 level in Shell. Clearly we've got an uptrend that's been in place for much of this year. Higher highs, higher lows, all good. I was thinking that maybe the sort of 1800 level could be something of a level because it was an important sort of previous high back here. So the trading opportunity was looking to be a buyer around about 19 on the return to the trend line, with a stop loss somewhere the other side of this sort of £18.50 level. Clearly, stock market trades, they take a lot longer to turn out. I trade a lot of US shares and they'll go. It's quite boring to watch them during the day if you're looking for moves of sort of 8, 10, 12% because they don't move that much during the day. But I think it was an interesting setup, and it shows that even though we tend to look at maybe 10 minutes and hourly charts, clearly the same sort of thing plays out on the weekly, on the daily charts as well. So I think it's an interesting one to keep an eye on to see if Shell is going to motor its way higher. And if the trend was going to continue, you'd expect these highs from earlier in the summer to be taken out and maybe back up to sort of 2,300, £23 plus. Let's see what happens. But I think it's an interesting one to keep an eye on that. So we will wrap things up there as usual. If you have any questions though, you can drop me an email. My email address is somewhere. There we go. David@tradeafter.com. I also do a webinar on social trading with Aondo, and I've written some stuff on my website, tradeafter.com, about social trading. I think it's a very complementary approach to trading, on top of doing it all yourself. So have a look at that to find out more. We're doing the social trading webinar next Wednesday, Wednesday night at 7:30 in the evening. So if you follow the link from before for this webinar, it should be on the same page. But that's it. I think any questions, drop me a line. You can follow me on Twitter for updates on charts and levels breaking and all that sort of stuff. And like I say, I think for me, Euro Sterling and the FTSE are maybe the immediate ones to watch in the next couple of days ahead. And we could well see a bit of choppiness, I think, with that ECB interest rate decision tomorrow lunchtime. But let's see. So until we do it again next time, I hope you have a good couple of days trading and see you next week.